Welcome to Product Management Insights, where we dive into the strategies and innovations that are shaping the SaaS industry from the perspective of a product leader. I'm your host, Chuck Akins, and today we have Ben Murray, also known as the SaaS CFO, joining us. Ben brings over 20 years of experience in finance and op management with a very special focus on SaaS metrics and forecasting. He's the founder of the SaaS Academy. He's helped over 3,000 companies and 15,000 plus students master these intricacies of SaaS and financial management. So his CFO expertise and product insight should bring some fresh perspectives today on how you align product strategy with financial goals. So we're going to dive into some different metrics that are involved in thinking about finance and product management. So welcome, Ben.
Thanks, Chuck. Appreciate the intro. Great to be here.
You're known as the SaaS CFO. How did your journey in finance lead you to become so deeply involved in the SaaS industry?
Yeah, so just quickly, I got started out in the airline industry in FP&A, financial planning analysis, and then got into software in the early 2000s. So rose through the FP&A ranks to SaaS CFO. But during that journey, and it's so cliched, started a blog in 2016. And just to share my templates, my forecast models, thoughts about SaaS metrics, and even that was kind of early for some metrics, and just wanted to share what I was learning on the job as a CFO, and that's kind of what created what I do today.
Yeah, as you mentioned, sharing templates and models and spreadsheets, and starting a blog, those are real foundational elements. So another foundational element, you got to have a framework that helps you explain things to people. So tell us a little bit about your framework.
Yeah, so I have this 5-pillar SaaS metrics framework. And again, you see different proprietary frameworks out there, or just, investors or PE kind of have their data set, and so just have kind of seen the best practices out there, develop my 5-pillar SaaS metrics framework. And because they're right, in SaaS, we know there's so many metrics, but we need a bit of a roadmap to guide us on that journey of metrics, because it's the right metrics for the right stage. And it just helps understand how we should move through the metrics that we need to calculate.
All right, so let's dive into it, unpack it just a little bit. Walk us through the 5 pillars as you see them.
Yes, sure. So pillar 1, and again, we're moving left to right. So if you're early stage, you'll start left side, pillar 1, and then work your way through as you scale. So pillar 1 is growth. So it's where is our new and expansion growth coming from, in the form of bookings. And even if we don't speak that bookings language, if we're PLG or self-service, we still need to derive that bookings data, because bookings data obviously so important for commissions and forecasting. And also it feeds all our go-to-market efficiency metrics. So pillar 1 around growth, new and expansion growth, revenue growth, ARPA. And then pillar 2, we expand customers. Now are we keeping them? So retention. So customer retention, gross dollar retention, net revenue retention, and then maybe some CSAT NPS score to supplement those retention profiles, and renewal rate if you invoice annually or you have multi-year contracts. And then pillar 3, margins. So our overall gross profit, then margins by revenue stream, really important, that revenue mix. And then pillar 4 gets into our financial profile. So the rule of 40, EBITDA, our OpEx profile. And then finally, pillar 5 is efficiency. So go-to-market efficiency. So CAC payback, cost of ARR, LTV to CAC, and also org efficiency, rev per FTE. And then I created a metric called ROSE metric, which is a little bit more refined than rev per FTE. So I unloaded a lot there, but just the general kind of principles of the framework.
Yeah. Well, as you might expect, I want to go deeper into that first pillar to begin. So growth, early stage, or maybe a pivot into a new industry, whatever it might be that involves go-to-market. How should a product manager think about those financial metrics in the growth pillar?
Well, I think we need to understand, it depends if, early stage, mid, late stage, just where is our growth coming from, especially for product managers, I'd say on the expansion side. Early stage, maybe we just have one product. So we're just landing new customers and that's it. There's no expansion potential. But eventually, right, we move on from that single product to offer additional features, modules that we can then upsell to our customer base. So thinking about what are those next steps that are going to be able to create more revenue streams for us, more product IDs, more SKUs that we can put on a contract. And then on the new side, of course, that's always that balance of, what's that MVP versus maybe what the founder is asking for, versus what sales is asking for, to land all those new customers. So I think there has to be a balance, because R&D investment obviously is very heavy in the beginning of a SaaS startup, but then eventually it's going to scale down as a percentage of revenue.
Right. So I understand certain metrics, whether I'm a marketer or, a quasi product leader. I know how I think about things, like, hey, I got 20 signups into my trials. In a day, I converted 5 of them. They chose this package because of how I priced it on the good, better, whatever it is, right? I got all this stuff going through my head. How do you view it as a CFO or a SaaS CFO? Because I'm sure you take a different perspective at the numbers than I would as a marketer or potentially product manager who's not educated like a CFO.
Right, because you can get a lot more detailed, say on the go-to-market side or marketing side, of all the different channels and driving signups or free trials or paid trials, or So on the CFO side, I think about, well, one, are we acquiring the right type of customer? Because then how we determine that is gross revenue retention and customer retention. We can get all these signups, but do we keep them? And that's where working with your marketing team, with your sales team, is understanding, where are these customers coming from? Are these users? Which channels? Is it paid ads? Is it conferences, events, blog posts, white paper, webinars? And keeping track of that to understand, as they move into, say, our free trial or paid trial or just become a customer, which ones are we keeping? Which channels are a good fit and are staying with us?
So what pops into my mind there, actually going to the retention part of it and working all the way backwards. So what I hear you recommending is that if you have a churn problem or opportunity, it may be how you originally acquired the customer as much as it is your feature set or your brand promise.
Yeah, if you think about the product could be perfectly fine and work well for the intended ICP, but maybe the materials or the ad copy is just attracting the wrong type of user or customer, and the product works fine, but it just wasn't an ICP fit or a user fit. And that's where we can look at gross revenue retention, customer retention on a cohort basis, where we cohort it by acquisition channel, just to see which ones are performing better. And if we have significant differences, why? Is it just we don't have the feature set for the certain type of audience? Or do we have a very homogeneous user set? Or do we have a very diverse user set, where our customer set, where it could be across all different industries? Are we going after, say, just CFOs that work for SaaS companies? So there's a lot of data that can be analyzed there.
Yeah, it adds to me, as I think about that, it adds a level of complexity. However, it could also deliver clarity in the insight. If, for example, if your analytics or product analytics, whatever you can tell about usage, would be different by segment or cohort. Maybe there was like you said, maybe there was a trade show that you went to and got a bunch of leads, and wow, they are really sticking around a long time because you were a speaker there and you got across the true intent of the software. Maybe outbound sales and outreach programs, you might be stretching, and it's not clean of a customer. Now, how would you? I understand how you would go about dividing it by cohort, channel, source, even campaign, possibly. How would you look at usage or other financial metrics? Like how would you start to look for positive and negative data feedback loops? Like what have you seen? What would I be looking for once I have my segments and cohorts?
Yeah, on classic cohort analysis, of course, it's month of customer acquisition, but then you can segment it by those, say, firmographics or user demographics. So again, it could be by lead source. There's so many different ways to cut this data. So say you cut the data that fits your business and how you can best analyze it. Then of course, we're going to look at just pure count retention, which could be user or customer retention. Then we can look at just revenue retention in general, gross revenue retention, net revenue retention. And those are the big things for me as a CFO. All right, we're landing a customer. Are we keeping them? And then CAC. Because of course, CAC and CAC payback can be different by all these different channels. Now, allocating expenses to a lot of different channels is very hard. We may have good, maybe not on lead attribution, but on the expense side, it's much harder to get that detail out of our financials. And that's where marketers, product managers need to work with the controller CFO to make sure we have the data set on both sides. But you could also look at, maybe one channel, maybe the CAC payback is a little higher than I want, but retention is fantastic. So you can look at some of these metrics on the CFO side, at least. And then, of course, you mentioned usage. There could be certain usage characteristics that our product team is looking at that indicate success in that customer's journey, which is also really interesting, but I'm kind of focused on the finance side.
Yeah, I almost look at usage as maybe leading indicators. Whereas I think you're right, the CAC and other metrics that you mentioned those are more hard numbers that you don't have to arrive at insights from. So humor me here. I know most people know, but when you look at lifetime value, CAC, retention rates, like talk through how you balance that, because you made a comment in there that maybe the retention is lower or higher, but other metrics would indicate that it's a good customer. So walk through that balance and how you think about it out loud.
Yeah, because we know we can't just fixate on just one metric, and that's why with my 5-pillar metrics framework, we can see all the metrics in context to see, because as a CFO, maybe like I said, CAC payback is running a little higher, a little above median benchmarks, but we have fantastic retention. So I'm more patient as a CFO because I know we're going to keep this customer, eventually pay off that CAC. Of course, we want to continue to improve that CAC payback. But what if we've got horrible retention and really high CAC payback, right? That's just going to suck up a lot of cash. So it's just the looking at all the metrics in context to see what they're saying, or maybe CAC payback, right? It's gross margin adjusted. Maybe we have really low gross profit and that's impacting CAC payback. So you've got to really look at that whole data set and see, and really come up with that story.
Right. So if we're measuring it and we understand how to look at it, the whole narrative and not overreact or, take the whole picture in. How do you report internally, and who does this? Like, what would the relationship be between the CFO, the product manager, let's say sales and marketing, and how do you get alignment between those groups coming off the reporting? But just maybe start with measuring, reporting, and the discussion.
Yeah, so the measuring reporting, right, that typically sits in your FP&A team. If you have an FP&A team, if you're at that scale where, right, accounting closes the books, and then we do all the forecasting, performance analysis, create metrics, benchmark those, create those reports, that then we present to the executive leadership team. So definitely at that executive level, but you have to be careful with presenting too many things. So really as a CFO, it's my job to point out the things that I think people need to pay attention to influence that conversation. So at an ELT level, yeah, they have that whole package and educating everybody about what these metrics mean. And then at kind of the next level down, CFOs, at least myself, spend a lot of time with the sales and marketing team, understanding lead flow, opportunity flow, what's working, what's that commit number that I should forecast, and also working with them. It's like, hey, here's what I'm seeing as far as efficiency, and you want to hire more reps, or we're not going to hit our target, we're going to hit our target. So that's where there's a lot of interaction with that sales and marketing team to give them my finance perspective, and also so I can understand their go-to-market motion. I'm not going to tell them what to do about go-to-market, but I need to understand what they're doing, what's important to them, to understand how, when you go from a quote to an opportunity to a closed won deal, and then it flows from there, and then that all flows into all my metrics.
Yeah, I know you brought up so many moving parts there. So you have the measuring, the reporting, into the forecasting, and then you talked about the goals of the business. I mean, here we are 15 minutes into this conversation. Perhaps we should have started with the goals of the business and worked backwards. So when your forecast comes out, right, and you're going to present, those key metrics to leadership, the first alignment you probably have to get is, does the forecast achieve the goal? Like, that's complicated in of itself. How do, I mean, that's step one. Like, is the forecast going to hit the goal or not? So how did you work into the financial goals and then set up the reporting? Like, there's got to be a connection there that's made. I know it sounds simple. These are the goals. This is the forecast. Get them aligned. But I know it's not that easy.
Yeah, and you brought up a great point, because thinking about the goals of the organization, that really colors my lens perspective. When I look at, say, metrics for SaaS companies, and I help a lot of SaaS companies and the founders and their finance teams, I need to understand, what are your goals for this company? Because maybe there's super high growth, but we have low gross profit, EBITDA burn, we're burning a ton of cash, but that's the mandate. We want to go after market share. We want to grow. So I'm not going to harp too much on certain metrics. So definitely you have to understand the goals of the org and then what metrics contribute to those goals. And then forecasts, there are hundreds of moving pieces in there. The headcount, hires, contractors, pipeline, and pulling those together into an accurate forecast. And then also be able to relay the big assumptions in there. So really, forecasts rely on me talking to all my department leaders, of course, my intuitive understanding of the business, to make an accurate forecast. But I need those assumptions coming from my leaders and saying, is this right? Is this where things are going? Versus, say, forecasting in a vacuum. And of course, then that forecast, always bouncing that off the company's budget or the company's goals to see, are we ahead? Are we behind? And that's the whole point of forecast, taking proactive action so you can recover if you're behind in certain areas.
Yeah, and I feel like if you identified that the forecast was behind the financial goals, the first person that can affect that, the CEO thinks, is the sales team, right? It could close more deals. Then it goes to marketing, like get more leads. And when you think a little bit further down the road, make better product, which then falls on our product leader. So what common, how should a product leader think about this? The pressure they feel to hit the financial goals and all the reporting, what is the misalignment? What is the missing gap between what you see as the CFO of SaaS? And it's like, okay, we talked to the sales leader, we talked to the marketing, that, they're all getting after it. How does the product person align the roadmap with what you're seeing financially?
Yeah, that's a great question. I mean, the roadmap, right? So many different ways we can go there, but with the roadmap, one, thinking about how we're spending time in products, is it new features to, drive new growth, new expansion growth? Are there features just to solidify our retention? Is it tech debt? Is it experimentation? So thinking about that product journey and how far is that product going to take us? One, maybe we're 10 million, but this product can only take us to 20 or 30 million ARR, and what's coming up next after that. So it's really more of that long-term view and not over rotating on very short-term goals or, of course, a lot of requests from sales to say, hey, we need this, this, and this. Otherwise, we can't land these new deals. So I think it's that long-term view, and also trying to look at how you're monetizing the product. Where is our revenue coming from? And, when I was working with one CTO, we had all our SKUs product IDs, and every month when I closed the books, I'd send him this report that showed all the revenue by product ID. Because they're curious. They need to know. They're like, hey, I developed this feature because it was requested by a customer or the sales team, but did it really drive growth? So I do think there's got to be more interaction with that product team and where revenue is moving. Just like we're working with the go-to-market team.
Yeah, let's play with that for a second, because if you break it down, and in the financial world you have to, everything, I mean, spreadsheets galore, right? Just so many different pieces of data. In the product world, there are features, right? The feature factory, just make more features. If I hear what you're saying, I might be able to understand not only did the feature support a product ID, but it could be new growth, It could be retention. It could be a sales feature. What I might have heard you say is that I might want to even tag it that way. And then I thought about, if this is whether it's new growth or retention, I put a new feature out into the market or into the product. It'd be really interesting if I could see if people actually used it. So I know we get product usage, but if you could look at feature usage as you rolled it out, installed it, wow, X amount of people use this, for the period of time after it was launched. That is that the kind of ideal feedback loop that you're talking about, to know why you built a feature and then see if you actually achieved the financial goal?
Right, because it's really, for me on the CFO side, what's the point of that feature? Is it to shore up our customer base and our retention numbers? Maybe we don't have great retention in certain product lines. Again, a lot of factors at play. Is it ICP that people we're bringing on to that feature, or is it just it's the right ICP, but we're just not keeping them? So we need to focus on retention and a feature that is improved, tweaked, and we don't monetize it additionally. It's just improvements, or maybe we're adding features that just shore up, like I said, shore up the customer base. It's not monetization. But then, of course, we have new features that we can upsell, cross-sell. So that, from my side, I want to know, like, where are we dedicated here? Where are we pointing this, and why are we creating this? And again, it gets back to then new growth, expansion growth, retention, and then a lot of those numbers that I'm looking at my side can help if I'm talking to a product manager. So like gross retention by product line, or new and expansion bookings growth by product line. And, we did all this stuff to expand, but it didn't result. So we can pair up a lot of this stuff nicely.
Yeah, that as you mentioned that you worked with a CTO, that example that you gave to get the numbers by product line. How common is it that the CTO or product leaders, whoever the product leader might report to, don't have the data they need to be prioritizing from a financial perspective? Like, do you have any idea over or under 50%? Like, where would you even estimate this opportunity for folks to have a financial feature feedback loop?
I think, it's hard to estimate. I mean, every company's different, but it really requires solid accounting data, financial data, so really on the CFO to set it up that way. Now, you can't go crazy with, 1,000 SKUs, 2,000 product IDs, but there's a balance there. And yeah, if I was in dev, I'd want to be curious. I'd be really curious if I just launched that. Like, did we monetize? Did we sell it? Right? That's that's the exciting part of it. So I think I think CFOs are now, like we spend a ton of time with sales and marketing. I think there's a huge opportunity just to spend a ton more time with that product team and just, again, the same thing. What metrics am I looking at as a CFO? What are you looking at, and how we can marry those together so you're a little bit more informed? So just like if I'm head down in my cube crunching numbers in a spreadsheet, same thing in a developer creating code that we know it's going towards a certain purpose.
Yeah, let's do a hypothetical on retention. I'm curious what kind of value you would see in this hypothetical. If I'm a product leader and I make a new feature, and I know that the customer success team probably needs to roll it out to existing customers to get adoption and usage of the new feature or upgrade, whatever it does new now, particularly with as many products as you that are rolling in AI. That's a common upgrade right now. Would you as a CFO be interested in adoption and usage of these new features like you can measure new growth, but would just usage of the new feature, above or below a baseline or some delta, would that be a leading indicator towards possible retention gain?
Yeah, definitely. I think as a CFO, I do want to know those high level usage numbers. Just like on the sales marketing side, I need to know how we're building our lead flow, how our pipeline is constructed. Again, like I said, I'm not dictating that, but I need to know. So I think CFOs, so for me, yeah, I would want to know usage. And yeah, are we developing a feature or say some AI feature embed that sounds fancy and great, but are people really using it? Because again, that's sucking up dev resources, that are very valuable. So I think just like I have a lot of numbers at my disposal, I'm presenting numbers that I think the leadership team needs to know. And I think same thing on the product side. What are those usage numbers that the team needs to know that may influence our next decision.
Yeah, it seems like a no-brainer. I'm curious how often that kind of data exists, and even how it would be used. But yeah, thanks for thinking about that a little bit. Let's go to another spot in the customer journey that's much earlier on that I think you also usage, but more importantly, conversion sits, and that's in the paid or free trial. So we did all this work, marketing wise, our outreach to get somebody to a demo, free trial, whatever it is. First, how important is this conversion from trial to customer for a SaaS company? Because I always hear about CAC and lifetime. I hear all this, but I don't know if I hear enough conversation about trial to sale conversion. It seems like it just all sits on the sales team sometimes, or I won't make any assessments, but what have you found in your interactions and watching the numbers, because you have feedback from the sales teams when it comes to paid or free, and I know that's very different, trials, trying to get those to convert to paid customers? Like, what is your experience? But do you have any insights to share that you've seen as a numbers person or as a way to think about the trial to sale?
Yeah, I think it just as another point in that pipeline conversion. So if we think about outbound sales and we have all our conversion points and start with the creation of the opportunity to close one, and same thing if we're maybe lower price point, high volume or PLG, that's just the extension of that opportunity funnel. And it's just as important, those conversion rates, how many website visitors are we getting to then creating a free trial, then free trial to paid. So all that is important. And again, it's kind of the same thing. And of course that could be more product influence too. And of course, marketing influence, that landing page. And, so a lot of factors at play there. But for me, same thing, I kind of need to understand those conversion rates, just like a closed one rate. Is that a good number? Is it not a good number? What's going on here? Can we improve different parts of that funnel? And not have any additional traffic to our site, and get more customers. So I see kind of same thing like enterprise motion or that self-serve motion. Same thing we've got to understand until we get that paid customer.
Yeah, let's try I don't have a calculator handy, so we'll use some round numbers. But let's try a potential walkthrough calculation of what this would look like from your perspective. So I'm going to tell you how I'm going to somewhat ask questions about how I think about it. Correct me if I'm wrong. But with financial goals, when it comes to a single customer, and let's not get into big enterprises and things like that, but when you think about CAC and cost of acquisition, how would you go about setting a goal for CAC? First, so let's establish a CAC goal, and we're going to work back to trial and sale conversion. But how do we start just with the CAC?
Yeah, generally, right. We know, CAC is not a standalone metric. We're going to calculate CAC. So let's just say it costs us $50 to acquire a user, but it varies. Or it could be 10,000, it could be 100,000. So it just depends. So, first, I like to benchmark and figure out kind of the guideposts based on our ACV or annual contract value, or whatever that ARPA is, that average price point, right? Goals are much different if we're selling a $100,000 product versus a $10 product. So again, we know, if we're selling $10, $20, $30, $40 product, maybe it's B2C or B2B, SMB, really at that price point, we're going to expect a CAC payback that's probably about a month or so, or a month or two, and then we can back into that. So if we think, say a customer, say they pay us $50 a month and they're going to, and then the CAC was $50, right? So that's going to be a 1 month payback now, not gross margin adjusted. So you can start triangulating, especially there are a lot of benchmarks available out there where we can kind of put some guideposts in place to say, all right, generally we should be running $50 CAC or $10,000 CAC, and then work backwards.
Yeah. So to make it more definitive, let's say that you came in and you baselined let's stick with you want to be at 50. But let's say you baseline it and the current CAC is 200. Let's just kind of start there. because what I want to do in the next minute or two is establish what our CAC is to talk about trial to sale. So, but I want to give you the additional piece of, as a financial guy, and you've got to talk to the leaders, both executive leadership, but then the sales, marketing, product guys, and customer success. The CAC's out of whack. Do you just set the $50 and you just say that is non-negotiable? Do you try to find a plan B? Like, how do you tend to think about how to set your goal for CAC?
Well, with that, I mean, it's negotiable, but you're right, you don't just stop. So if we're running 200, our goal is 50, we have to start to understand again. And like I said before, the balance, are we keeping those customers? So I'm more patient with a higher CAC or CAC payback. So that's one thing. Or do we have a high CAC and we're not keeping those customers? So there are a lot of things at play, but generally CAC, as a standalone, we that doesn't tell us much, but of course we look at LTV to CAC and CAC payback, and then that frames it to say, are we efficient and is this acceptable?
So let's say we did that and we landed at $100 CAC, just as our goal, because we know some different things are going on, because I want to keep round numbers. Let's back up to the free or paid trial. Let's even assume it's a free trial, and we know that we're trying to acquire a customer at $100. If we know that lead is coming in at $25, that would imply that, and by lead, I mean somebody that went into the trial, so successful trial sign up. That if I use oversimplified math, if I'm getting them in at 25 and I'm trying to hit 100 for my CAC, I need a 25% conversion rate on my trial to conversion. Is that right? You agreeing with me, or how would you think about that?
Well, there are a lot of factors. I mean, lead cost, sometimes that's very segmented, where you're just looking at, hey, I spend $100,000 on Facebook ads and it costs me X per lead, versus are we talking fully burdened, looking at the entire marketing org? So that just depends. I mean, I look at it at a higher level. Of course, marketing side may look cost per lead, all that stuff. But at the end of the day, say we're just an inbound function, just marketing. Let's just say no sales. I'm going to look at all our marketing expenses, slice and dice that by acquisition. Well, one, marketing and customers acquired, right? That gives us our CAC number. And then we can segment that by different channels potentially to see if we have CAC differences in different channels. And then we can do payback on that. So that's how I'm going to look at it as a CFO, because at the end of the day, right, we want those paid customers.
Yeah. So you're right. Before you can kind of even dive into this, one, you said fully loaded, which is number one. And then I as a marketer know that fully loaded can get complicated with inbound, outbound ads, earned, owned, promotions, email. I mean, attribution even gets really interesting in that space. So you don't want to get. I've seen a lot of people chase efficiency to the point that they hurt themselves as you're doing that. But let's just say that in a simplified world, we fully loaded, and the cost to acquire is that $25. Is it as simple as knowing then that if I can get the trial started at $25 and I know my CAC is 100, then is my conversion rate, my trial to customer conversion rate, is it 25%? Or is there something else I should be thinking about, how like you brought up fully loaded? Because I'm trying to simplify that part of the process, just like we did with usage and churn. But I don't know if it's that simple.
Yeah, I think, generally I'll look at cost per lead, but again, I think that's a relative measure for the marketing team and just what they experience. So yeah, I think, that conversion rate matters a ton. If it's 10% or 100%, that then influences the CAC. So, just like close one rate, I'm going to look at it the same way.
Yeah. Yeah. There's just so many different metrics to look at. Let's switch topics real quick. Everybody's talking about AI. First, in your AI journey as it relates to SaaS financial, what does the world look like for you in October of 2024? as it relates to AI entering your world. And then we're going to jump over to how that might affect product, and have some very specific questions about AI usage and tokens inside of financial management. But start with this first. How is your world changing as it relates to SaaS, product, financial?
I'd say on the finance accounting side, it's still really early with AI. Maybe some experimentation, but we're not having AI close the books, for example. So yeah, I think on what the CFO controls, still early. Yeah, a lot to go there.
And do you have in your industry more discussion about security, compliance because you're dealing with budgeting and forecasting is very much proprietary, whereas product features you publish and throw out on the internet anyway. So, are you finding a lot of governance, compliance? Like, because if you use AI and it's not it's one of the private models, in theory, you are training AI with your information that you're sharing. Is that a conversation that you're finding that's coming up in your world?
No, not my world. Not for early stage SaaS. It's not I'd say at least not coming up in my conversations. Now, I just interviewed a founder for my podcast where he founded a company that puts the guardrails to make sure we know what the AI LLM models are doing, and I think very relevant for those Fortune 500 type companies or financial services, healthcare, banking, etc. Highly regulated, where they have to know what AI LLM is doing. So I think you're seeing it. Yeah, bigger orgs, definitely that's on the agenda. Early stage, not so much. At least
not so much. Okay, good. So then let's get into the product side of AI. One of the things that I find interesting is that is the cost of tokens. We didn't, from a financial standpoint, we didn't have this variable cost before. So are you addressing this with, do you have any use cases or examples where someone's having to meter, guardrail, or have variable pricing to deal with the token cost?
Yeah, I think, with my client base, definitely have some AI clients. And I think like anything, you have to look at the scalability of that. And, is this a workable business model as the company scales from 1 to 5 to 10 to 20 million? Are those token costs going to go down over time? Where can we still have that pure play SaaS profile of 80% gross profit? Or are we at 50 or 60 or 70, and why? So I think we have to understand that, because that really impacts your business model. The scalability and the cost of those tokens. We're going to look at that just like any other expense, and that delivery of revenue, that it has to improve over time as we scale.
Yeah, I kind of equate it to any SaaS that maybe has to pay for some type of API usage. It's very similar. If it's not all you can eat, and you're hooking up to some third-party data source, it's something to think about. I mean, it's not the first thing you think about, but if you roll out a feature or add AI into a current feature, and there are tokens involved, it's only percentage points in the beginning, but the more usage you get, I think it's a variable cost that folks haven't thought completely through yet.
Yeah. Is it, and depending on the usage of it, is it just so cheap where we can just price the product just like a normal subscription product? Or is it, that heavy token API usage where, well, maybe our pricing model is impacted and we have to be more variable revenue, usage revenue, and then of course, pricing at rates, you work on it over time, but you have to be careful. And that's where you definitely want to do that math, so you don't get in a point where you have an unworkable business model. Either the cost structure doesn't work or the pricing structure, or both, that then you've got to make a major change.
Yeah. So do you have, let's back out to the framework and your experience over all these years working with different SaaS companies. What kind of scenario would have existed where you as the financial person could see something in the data and were able to take it to the product team or take it to leadership with an aha? Like, where is there a situation where financial data can uncover a problem that needs addressed? I know it's always coming from customer success and sales, you can see so much if you've set this up properly. Like what's something that a CFO or a product manager, like what would be an aha moment? Like, oh guys, we really, the data, the tea leaves is telling us we need to make a change. Do you share a story with us or something that comes to mind?
I'm trying to think. I mean, really I'd say the data I have available where I could go to the product team would be, revenue by product line, by SKU, product ID, things like that. And where is that trending? And then also just, again, retention. If we can get segmented retention and show that, SMB versus enterprise or this product line, that product line is performing, not performing, I'd say on my side, the financial side, and there could be more, but just think that's probably the one thing where I could go to the product team and say, but again, that's not just a product team discussion, right? It's also a sales and marketing discussion. So, I can't go to them and, hey, what's wrong with retention? What's going on, guys? Fix the product. So again, it can't just be, it's got to be, multiple departments involved.
Yeah. So I'd be remiss if we didn't talk about the SaaS Academy a little bit before as we wrap up. So I can imagine how that came to be, but can you tell us the origin story of the SaaS Academy?
Yes, really, I started my blog in 2016. So the thcscfo.com, just sharing my templates, posts on metrics. And then in 2019, started my academy because someone asked me, investment bank asked, hey, can you train my analysts, the new analysts on SaaS metrics? And it's like, sure, I could do that. I've done it before, but let me try to create a course. And that was really the genesis of it. So then I'm like, yeah, I should take this online. And I've got a newsletter going and I can offer it to the readers of my newsletter, my blog. So really it's 2019 where someone came to me, which is great because I didn't have the idea yet to create this course. And then, of course, created other courses since then. But it was really a request for someone for their team to learn SaaS metrics.
Yeah. And, a lot of courses, not only do you learn the information from someone that is an authority and that you can trust and get to know, contextually what they're talking about. I often find that these courses become transformational. Right, like you think about things differently. Like I already am going to think about product features differently, whether they're growth or retention, just off this conversation, and what the metrics might be able to tell me about that. But if someone goes through the SaaS Academy, before and after, what's different?
I'll give you one example. I have one actually current fractional client who took my course 2 or 3 years ago and then worked on their business for a couple of years, improved their accounting foundation, which is a big deal to create that SaaS P&L. And really it's all about that data structure that then we feed into the forecast, feed into the metrics. So that was a great story because he took that time to improve his data, his accounting. And then when he came to me, it was like, all right, it was a great setup. The chart of accounts was good. We can create this nice SaaS P&L. We can create all the metrics, which I love. So talking to founders, I think one is just it opens their eyes to things that they didn't even consider, which makes sense that you just don't know what you should know because that's not your primary role as a founder if you didn't come from a finance background. So I think it kind of opens their eyes like, hey, if I want to use data and metrics to scale my business, I've got to put these building blocks in place, and you're just creating the awareness on those building blocks.
Yeah, to me, I often hear people in the technology space talk about technology debt, or operational inefficiency. I think what we're talking about here is almost financial data readiness, or if you do this right and put in the hard work now, you will make better decisions, or at least have better insights with the opportunity to make the decision down the road. And who knows what that's worth.
Yeah, because now there's data debt, so kind of financial data debt, that if you let that go too far, it can be really difficult to unwind, especially if you have thousands of customers, users. And yeah, so if you're looking for that fundraise, that exit, like you've got to take that time 6 to 12 months before to get this in place. Ideally 12 months, so you feel really good about that data and what you're presenting to potential investors. But there is a lot of data debt that builds up, and then you've got to go in. A lot of my job when I take on new clients, we're working through that data debt and the reporting and the tech stacks so we can get a nice repeatable process each month.
Yeah, that's great. Well, Ben, a great conversation. I know I learned some things, from what you shared today. Thanks for coming on.
Yeah, appreciate it. Great to be on.